My name's Nigel Taylor. I am head of e-invoicing solutions at GXS Limited, which is the world's largest global B2B integration company. I'm pretty active in the e-invoicing world, where I am vice chair of the UK National Forum on e-invoicing. I also represent the UK on the current European Commission e-invoicing forum. I'm also an executive committee member of the European E-Invoicing Service Providers Association. I also participate in other working groups with the United Nations and the European Standards Committee, SEN, and also, I participate in industry groups such as ODET and Edifice. So I know what you're asking. Why is this guy still single, right? I mean, I don't really get out much. Today we're going to be talking a little bit about how procurement drives e-invoicing. I have a question for you first of all. In the keynote presentation, which I'm assuming everybody went to, was electronic invoicing or payables automation mentioned in any way, shape or form? No, good. I was listening to a part of it and I had to come back and prepare, but I think the points that guy was making really do set up this presentation nicely. Today we're going to be talking a bit about who owns the supply chain. I'm going to draw a very basic description of a supply chain, very generic, and overlay some of the challenges on a modern supply chain. My background is obviously e-invoicing and trade finance. I'm assuming that you guys know a lot more about procurement than I do, so hopefully this is going to be a very interactive session. If you've got any questions as we go along, please pipe up. Then I'll focus on why e-invoicing is so important, and I'll focus on the challenges faced by finance teams, specifically accounts payable. And then we'll hopefully draw the two together and ask ourselves, actually, how much more should procurement be involved in driving e-invoicing into your businesses? And then a little bit about the future, where a fully automated physical and financial supply chain can take your company. Okay. So the physical supply chain. Over the last 30 years, I think hopefully everybody would agree that the physical supply chain has benefited from multiple efficiencies and automation, but the financial supply chain, that is the documents that support the physical process, invoices, purchase orders, ASNs, has lagged behind. On the physical side, we've seen platform companies appear, okay? So globalization has extended the supply chain across multiple companies. ERP, that is a recent phenomenon. Many companies have multiple systems. ERP has collated that into a single point of efficiency for companies, and it's cheap and cost efficient, right? But it works. EDI, electronic data interchange, the business-to-business communications between companies. That's been around for about 40 years, funnily enough, but it only really matured in the 1990s, and there's a lot of companies doing it. Email. It's easy to forget that email is actually a fairly recent phenomenon. Global production, so things like just-in-time, vendor-managed inventory, fairly new processes, all designed to deal with the extended supply chain, and how logistics and shipping has changed as well to meet this new challenge. And of course, things like shared warehousing. So we've seen a whole bunch of efficiencies across the physical. So why is it that the financial side, accounts payable and the finance team have lagged behind? We're going to take a deep dive into that a little bit later on, but essentially it's still highly paper-based, inclusive of manual processes, and it's error-prone, and needs a lot of rekeying when you're dealing with paper invoices. So AP is still a paper-based business. Nearly 77% of all companies are still processing paper. These are a bunch of industry stats. They sort of change from year to year. But essentially, in Europe, there are still 16 billion paper invoices floating around. And that's a massive challenge for all businesses. And we'll go into a lot of detail in that later, as I said. But essentially, there's a huge cost-saving opportunity alone by just getting paper out of the process. And I think from a procurement perspective, that should be very, very relevant. So, a little bit of a look at a supply chain. Who owns the supply chain? Very, very generic description there, but essentially The majority of companies will have some large key trading partners at the top of the pyramid, then you'll have a whole bunch more medium-sized companies, and then a whole bunch of micros and SMEs right at the bottom there. Now I'm focusing really on your tier ones. These are the guys in your supply chain that you deal with. Okay, I'm not really thinking about tier twos, tier threes, which I think was mentioned in the keynote as not being that visible to you. So just those guys that you deal with on a day-to-day basis. And overlaid against that are your transaction volumes. These are the business messages between companies, whether it's electronic or paper-based at the moment. And what we're really looking at here is an assumption. It's Paretos Law that 80% of the volume of invoices, purchase orders, etc., actually come from 20% of your key suppliers. Now, I think that's a good generic example to use today, but we'll talk a little bit about how that might not apply to every single company in a second. And currently, the sort of common conception around how to deal with those messages is that for your large trading partners, you would use electronic data interchange, which has the perception of being highly complex and expensive. And then for your sort of lower key suppliers, lower volume suppliers, you're going to be using some kind of web-based solution. My personal perspective is, yep, okay, that's fair enough, but it's sort of in the past, really. A more modern approach these days is to have a range of integration solutions across your entire supply chain. It's very, very important to think of automation across the whole supply chain, because there are multiple efficiencies to be gained, and it's definitely a lot more cost savings. And that goes from all the way up to high-end, complex integration through EDI that runs your particular supply chain, through to desktop accounting package-based integration, so things like Sage, Peachtree, QuickBooks, Exchequer, for medium-sized enterprises, and again all the way down to those web form solutions and even email. So that's sort of a generic sort of description of where we are today and how to think about how you should be approaching your supply chain. I did mention that Pareto's Law doesn't really apply to everybody. I think that's probably true, because if you think about manufacturing companies, those companies that have really used EDI in the past and been successful, so retail, manufacturing, CPG, automotive, banking even, they really did focus on that top 20%. But it's not true for all companies. There actually is a lot more in way of efficiencies and savings to be made by approaching your entire supply chain. And I think, as I mentioned before, there are many ways to do that. So when you think about your entire supply chain and automating it, you can think of it of end to end. We mentioned that supply chains are increasingly global. That adds an element of complexity and pressure. So you're working in new regions, you've got new jurisdictional challenges, you have new cultural challenges as well. So you really are learning for each new country that you expand into, and there are multiple risks associated with that. Another pressure is the complexity of the supply chain as well. I was actually at the Commission yesterday, and one of their objectives for e-invoicing is to produce a holy grail kind of standard, right? So it's one standard that anybody can plug into, and it will produce any other standard that comes out the other end. I think that's a worthwhile ambition, but my experience, and definitely GXS's experience, is that actually supply chains are getting more complex. Companies use their supply chain as a differentiator. There's a guy called Martin Christopher, who's an emeritus professor at Cranfield University. He actually wrote that companies are now using their supply chains as a competitive advantage. When products are coming to market and they're being copied within months, how do you stay ahead of the competition? A good example of this is Apple, right? When they have great products, but they know they're going to get copied very, very quickly. How do they stay ahead of the game? They have a very lean procurement, supply chain, and finance process that allows them to stay one step ahead of the competition. Any comments on that? Okay, excellent. So we talked a little bit about a generic supply chain and some of the pressures that are sort of faced on a day-to-day basis. And I think you probably heard a lot of that in the keynote presentation. So where do procurement and finance fit in? So each has its own tactical objectives. On the procurement side, it's all about source to contract, maintaining supplier relationships, going through the RFI to RFP stage, diligence, and then negotiating contracts, all the way through to getting those purchase orders out to the suppliers. But in many companies' case, you've gone through the effort of putting all those efficiencies in place, and then everything falls off a cliff. All right, because you've gone and automated and become very efficient, and then all of a sudden you're getting paper back. So on the finance side, they're tasked with processing the invoices that are coming in. They've got a report, okay? So if you can try and imagine reporting on a bunch of paper that's flowing through your business, very difficult. Resolve disputes with suppliers. So not only are you talking to your suppliers, but the payables team are as well. Anybody here had to pick up a phone and chase payables for a payment of an invoice? No? Okay, good, thank you. I thought so. And of course, they're tasked with error and fraud control. I don't think suppliers deliberately try to defraud companies, although there are a few cases. But essentially, there's a lot of errors, a lot of duplicate invoices, so AP really have to try and get a hold of that. And then, of course, ultimately, they have to pay the supplier on time, because I'm assuming that you guys have negotiated contractual discounts with your key suppliers. It would be a good idea to make sure that the invoice is approved and those discounts are captured. So hopefully that's a fairly good description of the tactical challenges of each department. But the strategic objectives, and this is the purpose, I think, of my presentation, are very, very similar. Okay? Both departments want to talk to and collaborate with suppliers more efficiently. Both, I think, want to ensure that suppliers are paid on time, and I'll tell you a few reasons why that's important a little bit later on. Early payment discounts. I think working capital is a real priority for a lot of companies these days. If you've negotiated discounts, actually capturing them is something that you should really be aiming at, because a lot of companies, industry stats tell us about 35% of all contractual discounts are missed. Regulatory requirements. There are pressures across multiple geographic regions, across e-invoicing and procurement as well, and spend management analysis of the spend with suppliers, supplier performance, and of course you have to have diligence on your suppliers, understanding their credit position, their credit rating, and making sure they're going to be in place to do business with you some point in the future. So let's focus a little bit on the finance team challenges. What do they face on a day-to-day basis when processing paper invoices? Clarifying what we're talking about here, when we talk about e-invoicing, the invoicing process really does depend on your perspective, where you sit in the process, right? On the right-hand side there, we're talking about actually issuing invoices to your customer, so the order to cash process through accounts receivable. Not a focus for today, but something to bear in mind if you do decide to implement an e-invoicing process. It actually works both sides. But the focus for today is on the left-hand side. It's order to pay. So once all the sourcing and the procurement activities have occurred, you start to engage in transactions with your suppliers. You're ordering the goods or services, they're going to ship to you, you're going to receive an invoice, and then of course ultimately in the fullness of time you're going to payment. So that's the focus for today. Paper comes into the business. I don't know if you guys have experienced this, but it doesn't necessarily start in AP or the mailroom. It can actually go to you anywhere in your business, and it has to be sent to AP, opened, destapled, sorted, and then keyed from the paper. Okay, so that's a very manual, labour-intensive process, and it's prone to errors. Once the data has been captured and put into your ERP system, it has to be matched. You have to reconcile the invoice against purchase orders, any goods received information, and again, I've seen it in some companies, that can actually be a manual process. They're hooking through different information in the ERP, and it's not automated at all. And of course, a lot of you guys are working for big companies. You can have multiple ERPs, right, and different versions, different types. So it's a big challenge. And then, of course, if you match the invoice to the purchase order to the goods received information, and it's 100% match, everything's okay, it can go through and be scheduled as ready for payment. Unfortunately, 35% of all PO-based invoices will mismatch. Again, more industry stats. Okay, what happens then? And of course, there's the other element, of course, that you have non-purchase order invoices coming through. So there's a big mismatch between direct spend and indirect spend around the control around purchase ordering. So in essence, and again I'm going to quote more industry stats at you, but I'll look to nodding heads to sort of confirm this, roughly 50% of the invoices coming in are going to require some kind of exception management process. So what does that mean in a paper-based world? It means that the AP clerk will take the original, take a photocopy of it and file the original. The photocopy is then put into some mail, internal mail, external mail, depending on the geographics, and then is sent to the originator of the order saying, is this something you ordered? Why does the mismatch occur? Maybe you have to deal with the supplier and ask them, why didn't you ship this certain amount of goods? There's a dispute resolution process that will potentially occur, which will lengthen the life cycle. This is all paper-based. It's gone off into the ether. In the fullness of time, the paper will arrive back. It goes through a chain of approval, back into AP, telling them, yeah, it's okay, you can pay this invoice or not. That can be a 90-day process in some cases, depending on how efficient your paper-based process is. Okay, I'll talk to you later. It's also very much a black hole for finance. These guys have to accrue at the end of every month. So if you can imagine that there's absolutely no visibility, you can see why the AP guys shut their doors at the end of the month just so they can tow things up. So obviously in an electronic world, far simpler, you'll get real-time reporting and status. I mentioned talking to suppliers, not just you guys. Dispute resolution is a massive problem for AP. 35% of your time, their time, is spent talking to suppliers. And of course then you have to file all of the paper. I sort of worked out that the average company processing around about 190,000 pieces of paper a year. If you stack that up in boxes, reams and boxes, that's equal to the height of Nelson's column, okay, on a yearly basis. But also, there's another industry stat that says if you photocopy these invoices, they actually get photocopied 6 to 9 times. So if you take that into account, suddenly you're looking at a pile of paper that's equal to the height of the Empire State Building. So a lot of paper floating through the business. Then, of course, there's the problem with payment. A lot of companies nowadays like to consolidate payments and pay in bulk, and then it's the supplier's task to reconcile that information. Very difficult if you don't have good reconciliation information. Challenges for suppliers then. So actually, there are a bunch of efficiencies to be made on the supplier side as well. They print, they put it into an envelope, they have to pay for a stamp, and then obviously they put it into the mail, and again, it just disappears off into the ether. There's no auditability in that particular process. And of course, if they don't hear anything from your company, they're going to call you up, and it could be you guys, or it could be AP, or it could be both. They're going to spend a lot of time chasing down and doing their collections. Reconciliation is a big challenge for them. We talked about the fact that if you don't have the right amount of information, how do you pull together all of your orders against that one paid invoice? And it makes their cash management process very reactive. They don't have visibility of when they're going to be paid. It's like, it's in the bank. Oh, well, that's great. So a real problem for suppliers. And archiving as well. There's a bunch of rules, VAT rules across all of Europe that require companies to maintain their invoice records. We'll talk a little bit about that. So efficiencies, both sides of the coin, and paper really is a challenge. So electronic invoicing then. So there are a few sort of rules and regulations that you need to be aware of, and it's global. VAT is the predominant indirect taxation method globally. There are only really a few obscure countries left to implement it, such as the Middle East, Libya, and the United States of America. It's definitely the dominant method, and due to the nature of VAT, where claim and reclaim it occurs at each step of the supplier, at the supply, that the tax authorities put a few rules in place to make sure that electronic invoices were actually valid, all right, compared to paper. So what am I talking about here? Very, very briefly, and if anybody wants to talk about the intricacies of VAT compliance, I'll quite happily bore you for a half an hour on that one if you want to discuss it. But essentially, you have to make sure that the information is on, the correct information is on the invoice. So that's the data fields. You have to ensure authenticity and integrity. That is, it came from who said they sent it, and it has not been altered during the transmission process. And of course, you have to follow the same archiving and audit principles, for the correct period of time and being able to present in a human readable format. Now, focusing specifically on Europe, the way Europe tends to work is a directive comes from the European Commission, which is then implemented across each individual member state. But essentially what happens is the member state interprets the directive. Therefore, you have a landscape where each member state interprets it in different ways. So it can be a little bit of a confusing landscape. And I'm not talking just the invoicing, that's pretty much every directive. So there are a few challenges around e-invoicing. So hopefully I've sort of drawn a fairly high-level picture of supply chain and where procurement and finance fit, some of the challenges that the finance teams face, and how e-invoicing can help address some of those challenges. So why is procurement key? So we talked about the tactical elements of each department, but there are shared strategic goals. Anybody, have I missed anything there? Everybody happy with that description? Excellent, thank you. Oh, excuse me. So focusing on procurement then, so why is it I'm saying that you guys drive e-invoicing? A bunch of reasons, I think. Again, it was highlighted very, very well in the keynote. You guys have a big investment in the supply chain. And also, you've invested in many, many efficiencies. I don't know if you've got e-procurement systems in place or you're maximising your ERP solution, but if you're seeing that process and those efficiencies fall off a cliff the moment it leaves your department, you could be thinking in a much more end-to-end way and really realise the full potential of where you guys started across all of your business. I think e-invoicing definitely fulfills the promise of e-procurement. I mean, I'm not arguing against what e-procurement does and the efficiencies it gives your company. I'm just saying it can be extended and you can get a lot more out of it. Especially around your discount side. I mean, I always ask this question and I never get a straight answer, but does your company negotiate discounts and not take them because you can't get the invoice ready to pay on time? Improved spend analysis. I mean, you guys must focus a lot of time looking at where you're spending your money, with which suppliers, who's key, all of that good stuff. By extending e-procurement into e-invoicing and having intimate knowledge of all of the transactions that are going across your business, you can really nail down which suppliers are performing well to time, producing good quality goods, and you can work out who your key suppliers are to the nth degree as well. We're going to talk a little bit about community later, but I think you guys really have invested time in building a community. Now, whether that's all consolidated into a hub, I don't know, but it's still a community. By leveraging e-invoicing and taking it to the next step, you can bring that community together and do not just the invoicing, but many other valuable things. We'll focus that in a little bit. Supply chain risk is already an ongoing concern, especially supplier insolvencies. A lot of companies are going under. Insolvencies were up in the UK and the US last year. A little bit of a decrease at the start of the year, but again, those numbers are starting to creep up. So, access to credit is a big challenge for your suppliers. And of course, reducing your carbon footprint. Of course, you all want the world to still be here when your children grow up to work in procurement, right? Yeah. Also, treasury. E-invoicing is actually a big focus for Treasury. The banks are offering new kinds of finance to small companies, and it's based on approved invoices. So a lot of your suppliers will factor. That is, they'll send their receivable out, and they'll receive a discount rate back for early payment. But the rate is quite prohibitive because all of the risk is taken on by the factor. Right? The goods haven't been delivered yet, as far as they know. Don't know if the buyer is going to pay. The alternative to that is that when an invoice is approved and ready to pay, all the risk is mitigated. Therefore, the bank can then finance at a much more attractive rate. It's got a big increasing trend. If you want to talk to me about supply chain finance afterwards, I'll be more than happy to discuss that. Why change? I'm going to move on briskly now because I'm running out of time, but there are lots of strategic elements to this. Reducing costs and automating processes, I think we talked about that in detail, but you know, there's a lot to be done on the tactical side. But on the more strategic side, it's gaining strategic value. A lot of companies, as I mentioned before, are looking at supply chain and back office efficiencies as gaining the next competitive advantage. Optimizing working capital, yeah. So you know, if you can actually pay your suppliers on time with a contractual discount or a dynamic discount using technology. You guys are well aware that 210 net 30, which is the generic term used, but it's a 36% annualized return by paying early. You're not going to get that in the bank. Managing your risk, credit risk of your suppliers is a huge problem, and you guys have the absolute control. This is the one risk that you guys have the most control over, is making sure that your suppliers have enough liquidity. Now that may or may not be a priority for you. If you've got key suppliers and they go under, it could be a real challenge for you producing your goods. Corporate social responsibility, again, it was mentioned in the keynote. How do you make sure that all of your suppliers are adhering to your ethics across multiple geographies? You know, e-invoicing can help you achieve that in different ways. And then we talked about the legislation around e-invoicing. There's also late payments legislation that's coming through. Again, I can happily talk to you about the pros and cons of that. It's not the ultimate. You know, there are sort of clauses around it, but essentially it's good practice to pay your suppliers on time. We won't talk about the tactical because we're running out of time. But why do companies do this? It's all about the bottom line, right? Essentially, you're going to get a bunch of tactical savings by getting rid of the paper. But then you have all of the strategic benefits on top of that. Okay, so if you do decide to extend procurement into e-invoicing and you do decide to integrate your supply chain, what can you expect in the future? The history of invoice automation is very straightforward. First of all, you know, companies had decentralized AP departments. GE is a good example of this. We had something like 50-odd AP departments globally, and the first phase, if you like, of automation is to bring them into shared service centers or regional service centers. And then they started thinking about ways of dematerializing. How do we get rid of this paper? So some companies have put scan and capture solutions in place, but B2B integration, of course, was the other method, electronic data interchange. But after that, what's the next step, the value-add activities? Well, once you start getting electronic documents into your business, you can then start automating all of those finance processes to make them much more efficient, and then you can link them back to procurement activities through spend analysis. You know, getting invoices approved in under 5 days opens up that window of opportunity for achieving those working capital initiatives. And that leads us nicely into supply chain finance. If your company doesn't want to leverage its own working capital, you know, maybe it'll affect your weighted average cost of capital, then the banks are there, they're waiting to stand by, and they can actually act as a middleman by allowing you to keep your cash, maybe even extend your DPO, and at the same time give suppliers a viable alternative to early payment by taking a small arbitrage in the middle. Communities, we talked about communities. So if you engage in an electronic invoicing program, you can bring all of your suppliers into a central electronic portal place, a community. And what can you do with that? Well, you can actually start engaging them in different activities, making sure that your supplier information is up to date. Your vendor master list is obviously one very nice tactical element. If you've got multiple ERPs, how do you manage your supplier records across those? You can put it into a central place, and actually it's self-service. They'll do it for you. So life cycle and risk management. So if you have projects, let's say that you are moving to a new ERP and you've got new integration that you need to communicate to your suppliers, you can actually manage that through a central place. So I would imagine that right now you're picking up a phone and trying to deal with suppliers on a one-to-one basis. You can manage that through a central community. So these are the tangible things that you do on a day-to-day basis that an online community can help you automate. So I hear a lot about social community, B2B social. It's all holding hands and it's all great, isn't it? Because it's new. I think there are many, many tangible things that you can do, and I think the big one really is corporate social responsibility. If you have ethical programs that you need to put across your entire global supply chain and get your suppliers to sign up to them, you can manage that through an online community. So I talked about the physical supply chain and the financial supply chain. My next buzzword for you is the information supply chain. This is the underlying data for all of those business-to-business transactions. So if you extend procurement into invoicing, you're going to get a picture of how your company is doing business with your entire supply chain end to end, right? And it's a lot of data. So what do you do with that? You can actually analyze that to the nth degree. And as I mentioned before, you can understand exactly who your key suppliers are, and you can start blending your physical information with financial. So credit ratings is obviously one way of looking at a company's financial health. I think credit ratings, pros and cons. Lehman Brothers, AAA rated one day, credit crunch the next. But there's a theory in the banking world now that physical information and the performance of suppliers can actually augment credit ratings. So how well your suppliers do business with them in the future is going to help them get access to credit from the banks. So I should have really put, is this the business network of the future, with a question mark, but this is just my perspective. I think it's a joined up end-to-end process. It's procurement, it's finance, it's treasury, and you've got the integration as well. So you've got your EDI and your supply chain teams. And it all comes together in a central point to give you all of those tactical efficiencies, but the strategic benefits when you're looking for that competitive advantage. We talked about procurement, we talked about working capital optimization, getting your entire supply chain onboarded, so not just your high-end B2B guys, but the small and mediums as well. And of course, getting all of the financial reporting and access to the information supply chain and intimate knowledge of how your company is doing business. So I've run out of time. Thank you very much for your attention. Hopefully that's been informative. Any questions at all? Okay, so if you'd like to see me afterwards, please come say hello. Oh yes, sorry, I've been told to pitch. So we do have some, got some materials for you there to take away. One is a report that was sponsored by GXS on supply chain, and also we've got a book by my boss, so I have to plug it. But it's a very, very interesting analysis of how physical and financial supply chain automation has matured and how the information supply chain is the next big thing. So please help yourselves, take a copy, and it's a worthwhile read.